So many investors tend to miss out and maybe tend to encash in tough times. We have all seen this. So to protect the investors from these variations in the market, which is a very natural phenomena, it's the nature of the beast, is all we call it. Therefore, it's these different strategies actually help you to tide over that volatility, tide over that period of uncertain environment, so that you can actually hold for long term.
Yes, this is that program where we have smart money conversations that can help your savings go smarter. And these incredible independent financial advisors, they know you work hard to earn money, and their job is to put your money on duty. Money on Duty, of course, is powered by SBI Mutual Fund, a partner for life. And our IFA of the week, decoding money for us, is Mr. Surya Bhatia. He's a promoter of Asset Managers, also promoter AM Unicorn Professional Private Limited, co-founder at Money Paatshaala, a chartered accountant with a passion for personal finance, and hence started developing experience and expertise in the same. And along with pursuing his passion for personal finance, he also did CFP, Certified Financial Planner course. And in the year 2003, he started his own wealth boutique firm, Asset Managers, a financial advisory concern advising on money management principles. Wonderful to talk to you, Mr. Bhatia. How are you?
Thank you. Good to hear you. Thank you for calling me, inviting me over here. It's a pleasure to be here.
The theme that we're going to involve Surya Bhatia is multi-asset allocation funds and their importance in the current markets. For someone worried about markets, Mr. Bhatia, can multi-asset funds genuinely reduce the impact of market crashes? And if so, yes, then how?
Yeah, definitely. I think the multi-asset strategy, as the name says, is a combination of various asset classes put together. So you have equity, you have debt, you have commodities. Within commodities, typically you can call it as gold, silver, and you even have REITs. REITs are real estate investment trusts and the InvITs. So what happens is a combo of all the asset structures available to you in the market, and subject to what the fund manager believes and wants, he can actually play around within those 5, 6 assets available. And depending on what could be the flavor of the season, he can actually buy more or sell less and accordingly adjust the portfolio.
Wonderful. Let's progress now. When you look at investor profiles, which audience set, Mr. Bhatia, benefits the most from multi-asset funds, and why do they benefit the most?
It's very interesting. This is one strategy which we believe benefits everyone. So even if it's a novice investor coming for the first time, he or she can actually start with this strategy, because as I just said, you actually have a play across various combinations of various asset structures available in the country. So therefore, a starter can come into play, a seasoned investor can come into play, and both you and me can, of course, come into the play.
Excellent. How do you address investors who believe they must go all in on equity to earn high returns, Mr. Bhatia?
There is nothing wrong in that, actually. See, equity is a fulcrum of any growth of assets you really want in the long term. Everything and anything eventually comes back to the industry. And coming back to the industry means that's equity asset class, and that's where the real growth lies. But that growth is not linear. So many investors tend to miss out and maybe tend to encash in tough times. We have all seen this. So to protect the investors from these variations in the market, which is a very natural phenomena, it's the nature of the beast, is all we call it. Therefore, it's these different strategies actually help you to tide over that volatility, tide over that period of uncertain environment, so that you can actually hold for long term, which simply ensures that compounding actually works in your favor. Besides compounding, taxation also plays a very important role. Despite having a combination of various products of, as I just said, equities, debts, commodities, REITs, the taxation is also very friendly from the perspective as it is as good as an equity taxation in most of the multi-assets. Of course, any conservative investors who come into play wants to have a lower equity. The taxation is a little different, but it still is very, very tax effective way of investing money for the long term.
Excellent. Since we're celebrating you wonderful independent financial advisors and all that you do to help us grow our money, I always bring up one incident with a customer, with a member of your investing fraternity. What's the funniest concern a customer has shared across in terms of investing?
That's interesting. But actually, the incident which I will share with you is actually not with one investor. It's multiples, and it runs across board. Huh? You will see it in your personal life also. I see that every day. Very simple. I want to take very high returns in my portfolio, but don't let me take risk. That's what standard we end up hearing across board. Huh? I want to take risk, but my risk should be very low, not commensurating with the returns. And that doesn't happen. The risk and reward actually goes hand in hand. The higher the risk, higher the reward is something, a message I need to tell every investor. And if, of course, all the lovely audience we are having to at least know this fact of life. If you want to have high returns, please make sure your investment period actually percolates over a long period of time, because that's where the real money lies. But in case you have a short-term period or a period of lower duration for which you can hold the money, then you need to be a little bit pruning down your exposure to the risk assets, which actually means equity. And then again, within the multi-asset strategy, you even have strategies available with a lower equity exposure. So suit yourself, decide what you want to buy, and stay invested.
My last question has got to be about gold rates. We haven't touched upon that as yet. Do increasing gold rates strengthen the case for multi-asset funds as a diversification strategy, Mr. Bhatia?
See, let me answer it a little differently. Different times, different asset classes do well. We talk about gold right now because you have seen a last 1 year or last 18 months of unprecedented run in both gold and silver. But if I just give you a little bit of data points over here, if I talk about the last 18 years and I pick up three broad asset classes, let's say equity, debt, and gold. Gold outperformed within these three asset classes, the other two asset classes, 7 times. And interestingly, debt also outperformed both gold and equity twice in this block of 18 years. So you do not know, and no one is demigod over here, which asset class will do well this year or maybe the next calendar year. So what makes a very strong case is to diversify your asset allocation, knowing fully well that at least one asset class will do well in this structure, which will enable me to get a very consistent long-term returns.
Lovely. All of you who are listening in or watching, remember, Money on Duty with me, Hrishi K, powered by SBI Mutual Fund, a partner for life, helps you decode money with some excellent independent financial advisors. These are smart money conversations that can help your savings grow smarter. Catch us on the radio this entire fortnight over the next couple of weeks, Monday to Friday, 8:30 to 9 a.m. And the video episode, should you prefer your content on video, comes up on the Radio 1 International YouTube channel. Mr. Surya Bhatia, I really appreciate your time and your valuable insights. Hope to see you soon, sir. Take care. Bye-bye.
Thank you.
94.3 Radio 1.